Okay, I'm going to get started in a couple of minutes. If you don't have access to your charts, we're working on getting these videos into YouTube. So let me start out here. I hope you can see my screen. If you can't, let me know. Clear and simple, the dollar's under pressure. We had two inflation reports come out, CPI and PPI today, CPI the other day. In each case, the dollar came under pressure. It doesn't really matter what the news is. It only matters what the reaction is. I'm sorry. And the reaction was to mark down interest rates in the US and sell the dollar. And that's where we stood. We stood all day today. If you threw a dart at just about any currency and went long, gold, whatever, you're making money. But we're just dealing in this pocket of time. So let me go through what currencies are leading and what's lagging. Start out, the Aussie is the outperformer, followed by the yen and the Swiss franc. The reason, because they're most sensitive to interest rates. Then we have the euro, and lagging is sterling. Sterling is weakened against just about every currency. So what are we looking to do now? I said we trade this pocket of time, which is 10 to 11 New York time. And we're not going to chase at this level. We're going to wait for a retracement and see if we can get on with a long position, a short dollar position. One thing we do know is that if you look ahead to the weekend, you'll probably have a better profit taking tomorrow. Once that's over, no one's going to want to go long dollars into the weekend. So tomorrow's a different story. Today, we're sitting here waiting for a retracement. So I'm going to look at a couple of currencies. Let's look first at the euro. And when you get these straight line moves up after data, very hard to trade, especially, if you're on like a 15-minute chart, even a 5-minute chart. And that probably the only time I would recommend looking at a 1-minute chart to try to get you into a position with the move, not to fade it, but with the move. So let's look at the euro dollar first, and I'm going to go to the Aussie. The euro dollar, this is a 5-minute chart. Let's start with a 15-minute chart. 15-minute chart went straight up. Okay, the initial high on the spike move up was about 110.43, and that's what this line is on this mini retracement here. I'll go to a 5-minute chart until these markets settle down. Let's stick in the shorter term time frames. So we have a level at 108.43. What I'm going to do here is put in, I'll set this up. I'll probably have to redo it if I switch charts, but I put in a buy, stop below this level over here, hoping we get a retracement in here that allow me, and this is the most important part here, that would allow me to get my take profit below the high of the day. We don't want to bet on a new high here. Just want to get a profit below the high of the day. And where do we put our stop? We put our stop at a preceding amazing trader line, which is the last low here, mini retracement ahead of this high. That is key to the amazing trader. It's where you put your stop. We'll go to the outperformer of the day, the Aussie dollar. Had better than expected. That's the wrong one. Better than expected jobs data. And the Aussie put a little cash up today. And as you can see on a 15-minute chart, all we have are red amazing trader lines. So we got to go a long way into here for this market to reverse and blow out this thing. But it's too high to chase here. I'll go to a 5-minute chart. 5-minute chart. We don't use this red line over here. And although we have a red line here, this was your retracement. So if we're looking to buy Aussie, which we will do on any kind of a decent dip that allows us once again to put a stop below a preceding line, or to take profit below the high of the day. So that would come in at 67.51. So about 67.50 would be your stop. So we'll keep an eye on the Aussie to see if that moves. But in the interim, let's take a look at the euro, because that is one of the outperformers, and that's been leading. And again, we're going to a 5-minute chart. Although I could use a 15-minute, probably has a similar line. $43, right? If not, we got to put a stop below 110.08. So I'll just use the 15. I can use the 5. It's used the 5. We'll put in our stop right here. As you can see right now, the take profit is above the high of the day. So if I can get a move somewhere in here, I'll put it on a long with a little bit more of a cushion. As long as we can take our take profit somewhere in this level over here. So while we wait to see how this market unfolds, we're using a little patience here. There were ample trading opportunities earlier, but we're just trading this pocket in time over here. I'll talk about fundamentals for a second. Markets move on expectations. They build in expectations and they work on interest rate differentials. In the past, it's always been the 2-year, which has been the driving time frame for moving foreign exchange rates. Now, if you look at the euro versus, I'm leaving.
Chief economist Bill, who says does not expect a discontinuity in household spending as homeowners refinance and fixed rate mortgages this year.
That's just a squawk back. I'm going to leave it on just in case somebody says something. But the 2-year differential has always been something. But they also look at the 10-year, and the 10-year German Bund versus the U.S. Treasury is about 103 basis points, and that's been narrowing significantly, and that's one of the reasons the euro has taken on a bid. Okay, so here we go. We're coming in now into an area where we could probably go long. We're seeing some profit taking. Trying to be a little bit patient to see if we can get a buy below somewhere in the 110.40s. Well, let's play it by the book. We get a dip anywhere here, we're going to buy. Right now, we're just below the high of the day. Well, I try to take a 51 there. I got filled at 52. Or did I get filled? Looks that way. Okay. So we did buy the dip in here. Stop is below this level over here. And we'll see how it plays out. But this is actually trading by the book using the preceding line as your stop. And the question is, where do you get in? One day I'll explain what I call magic levels. The 50 level is often a very important level. And we'll do a lesson on it. But that kind of dictates whether this is going to have a bid or not. They said, I wish I got in a couple of pips earlier. Try to take a 51 offer. Got filled at 52. And we'll see how it works out. Right now, we are seeing some profit taking. Let's see. Now, another way I could have traded that, and probably if I didn't have an itchy finger, would be to wait for an unconfirmed line to form. And once an unconfirmed line forms, I can go long. But I'm using a small 0.25% risk reward, so it's not a big risk on this trade. And we'll see what happens. Let's look on there. It's always tricky playing a correction because if you wait too long, the market will often turn on you. And if you're premature, sometimes you don't get into the most optimal level. But right now, we got a pip on this trade. And the whole principle of putting it on was saying we know where our stop should be, preceding line. We're trading the retracement, tried not to chase it. Take profit is probably just below this line over here. Let me put my trade on my terminal. And one reason we know we'd have to come all the way down into this level here to possibly put a real squeeze on positions. So rather than stare at the screen, we know what the position is. And right now we have just about a pip in it. But more important, and exactly at 52, more important is explaining the principle of where you place your stop, always at the preceding line. Try to get your take profit within the day's range. And right now we're expecting some profit taking. We just didn't want to miss the move. So now if we went to the Aussie dollar, which is over here. This is a 5-minute Aussie. It's starting to look a little toppish, but does this red line mean anything? It only means something if we take out this high. This is not a directional indicator, by the way, which only occurs. Excuse me, I got something in my throat. Which only occurs at the low or high of a day, but is part of the ladder. And out of these two red lines, what do you think is more important? This red line or this red line? Remember, it's the low that precedes the most recent high. In this case, you could make a case, this is it, but this is clearly it. And this is where you can have a little bit of a judgment. Judgment will be that this was a correction. This was your high. This was your real correction. And if you're going to go long at all, which would be somewhere in here, you put your stop below this line over here. So scooting back to the euro dollar, we have 5 pips in it right now. So at least the principle worked. And we'll see how this unfolds. Now, anybody want to look at any other? Well, let me get the Q&A. No questions right now. So let me see what else we can look at. Here's an interesting one. I'll throw it out to you. Why sterling is lagging? This is euro versus sterling. Euro pound. You have red lines dominating 15-minute chart, moving higher. Possible top, maybe. But here is here is the last preceding line. Not really a correction. This is more important down here, but you can see why the euro has been and sterling has been an underperformer, mainly because of this cross. Again, we're going to discuss that at a different level, different time. So I'll keep flipping back to the euro just to see what it's doing. Remember, we have a take profit here at 110.66.2, which is a little bit higher than I would have liked, because this high here is at 67.1. So really just within a pip of the high, which tells me when I have a situation like that, sometimes I will jump ahead of it, take my profit, and look to reestablish. Now I could show you something else. I'm not suggesting I will do this at the moment, but if anybody ever look at this over here, this is a break even. Actually, we had default as break even plus 1 pip. So if I were to go break even on my stop, it would be at 110.53. And I would only do that if I got another line here and maybe a third line. I might put my break even in there. But that's a really neat feature that we have on here. So really, let's go. So I have a position on. We're going to see what happens. We can discuss anything else you want, but I think one of the things that you have to understand is that markets are dynamic. And what I mean by dynamic, they're always shifting with trading on expectations.
So from the Bank of England to cheap economist pills, this can be too simplistic just to look at the Bank of England's inflation forecast at a 2-year horizon.
I think I'll shut this
It
off.
assumes a linear response to large shocks.
But the main takeaway you should have here is why this position was put on, where the stop was, and where the take profit was. And if I could have gotten my take profit somewhere over here, I would have gotten it already. So sometimes it's where you put your take profit will give you, especially when the high or low is set in, will give you some realistic targets. Let's see, we have to. Now I can go back. Michael has been emphasizing, and we just stick with the euro dollar right now. And why you might want to go long. Well, first of all, this is a breakout. I think it's a new yearly high, because I believe this would be the year. This is a weekly chart. So we did take out the weekly high here. And now we're running into some longer term resistance here. So for that reason, you can be a little bit cautious being long up here. But if you look at this weekly, it would have told you you had to be trading from the long side in the Eurodollar. And it's 1, 2, 3, 4, 5, 6 or 7 weeks in a row. We've been moving higher. So it told you you had to be long euro and trading from it. And if you went to the daily and then etc., but you could start with the weekly sometimes and the daily, or you have a red lines. So your red lines, it tells you got to look for opportunities to buy. And that's the easiest way to eyeball using longer term charts. So as I sit here, going back right to my entry level, had I put a break even, I would have been stopped out over here. Well, you're forming a second line over here. Let's look at the 15-minute chart. What? Well, I'm getting a question offline. Hold on a second. Okay, I just answered a question offline. We did have a nice little bounce over here. We broke this red line, but we haven't broken this red line. And that line gets taken out, it'll indicate that this move is probably topped out for the day, or at least for now. Let's take a look where my stop is. Stop is at 39. So we're back to my level here. Would have been nice to get in over here, but then to take profit would have been somewhere about over here. So right now we're break even on the trade. But again, when we do these trades during this meeting session, it's specifically designed to follow strict AT rules. And to reiterate for the about the 5th time, stop always below a preceding line. If you think the high of the day is in and you're buying a retracement chart to get your take profit below that line, which makes it a realistic level that could be achieved. Now, once again, we'll talk about days of the week. We're trading on Thursday. And when you put a position on, anticipate that you're not going to carry. I'm sorry, just 1 second. One of our subscribers is asking a question. Well, anyway, the markets come, but anyway, so remember, especially if you're trading a prop account, and Michael's mentioned this several times, you can't, except for certain brokers, carry position over the weekend. So just remember, when you start trading on Thursday, you have to anticipate, do you want to hold that position into Friday, or do you just want to shorten your time frame? So you're, so you don't have to hold it. Because if you hold it into Friday, you're at the mercy of the market. So anyway, my view here, pure and simple on dollar, is that we'll probably have some profit taking at some point tomorrow. One of my rules of thumb is that you can fade a correction early in the day, especially when there's a strong trend, because the market can absorb that buying or selling. If a correction takes place later in the US session, and you're not willing to hold that position overnight, in this case into the weekend, then you can't fade that correction because the market has less ability to absorb those flows. So here we are. We had a little mini run below that 50 level. We're back up and we're back in the money. So otherwise, I haven't looked at any of the data, but the key data came out this week on the PPI and CPI. And now market is now adjusting positions. But there's one thing that's very clear: the dollar is now under pressure. There's worries about recession and expectations that the Fed will probably raise rates by another 25 basis points, but that's going to be it. And if that's the case, with Germany, the ECB is still talking tough, and we'll see how long that goes, then differentials will start to at least still favor the dollar, but by less so. And in those cases, that will tend to undermine it. Now, of course, there's one other thing, and I'm going to mention this ahead of time. Market probably overreacted to the CPI and PPI because oil prices are up sharply this month. They're trading on headline. The core, less food and energy, came out basically on consensus in both the PPI and CPI, and that's for next month. So we're not going to even think about it. That's one of those cases, if you think too smart and the market is reacting the other way, that's how you lose money. My first reaction was, hey, the core is the same, core is unchanged, or basically met consensus, means that inflation's sticky, oil prices are up, so headline will probably go up next month or the month after. I just came back from Ireland, and when I left, gas prices here, which Europeans will think very cheap, was about $3.15 or 20 cents. I went yesterday and it was about $3 and almost 60 cents. So it's gone up quite substantially in the last 2 weeks. So just keep that in mind, but we'll talk about that next month, not this month. Right now, we're doing the hand with dealt, and the market is moving based on interest rate differentials, and that is undermining the dollar. You know, in trading, it's much easier to be in when the market's trading, which is like in here. You get kind of immediate gratification. Right now, we're in kind of a sticky zone. We have at least on a 5-minute chart, not on a 15-minute chart, we have a directional indicator. And on a 15-minute chart, we have kind of a top in here. So just now a matter of waiting. European close, we'll see what happens, and I'm going to look at some other stuff. Let's look at dollar yen. Dollar yen was bid because of whatever reason, and now it tanked. So what do we do in that case? We want to buy dollar yen? Probably not after something like this, although we did on this chart, did run into pretty solid overhead resistance. So let's just do a drill down, and this is a good time to do it. If we went on to, I think this is a daily chart. Dollar yen clearly in a range. Look bid, but this is clearly in a range. And if we kept going down, to a 4-hour chart, you could say we have a directional indicator in here. And where's your target? Well, you hit a preceding line over here, and that's been taken out. And when that was taken out, we've been over here. We actually were into a bounce trade. Preceding line is taken out, came down, bounced, stop above here, and look what happened. And the currency, that the dollar, which looked bid, when you look down on the drill down using AT, it really wasn't. 1-hour chart's a little more sticky, but look at the overhead resistance here. 1, 2, 3 times. So dollar yen kind of gave you a signal. Here's a 15-minute chart. Here's a 5-minute chart. So I wasn't trading it, but dollar yen gave us a signal that although it looked bid, it really wasn't. And you should be looking for levels to trade from the short side. And actually that worked out. I didn't have a position on it. To be honest, I really wasn't paying attention to it. I'll just go back to my euro dollar here. It's kind of a comfort zone when you know where your stop is, and you can sit and just let the market beat itself up a little bit. And once the profit taking takes over and done, you should see fresh demand. And we'll see if this level gets taken out over here. This level gets taken out over here. This directional indicator will be over. You have to get above, I think, 110.60. So we've been out of here now for about 35 minutes, and be very helpful if anybody has any questions. I think I can find the Q&A. When we bounced off the high over here, so here's the quandary, which is a really pretty good thing to say. You wait it out, you pay attention to this, and just take your profit, even a small one, and then reestablish again, chance of missing it, or you play it by the book. You know, that's the one thing of trading when real money is buying, and there's a ladder building, it's a no-brainer. You just buy, you know the market's going to be buying dips, or if it's coming down, selling rallies, you know the market's going to be in there doing it. Okay. But once the market is top to bottom, then it's a waiting game. You hope you can outlast the market. Right now, what we're seeing is more sterling selling. That's kind of now seems to have taken over. Let's look at sterling, for example. But that's where the flow is right now. Here's if you want to buy it down here. If you're playing by the book, you could buy with a stop below this line over here. But you have kind of a directional indicator here. And if we look at the next time frame, which is a 5-minute chart, currency, it's starting to look pretty bearish. So we know sterling's being sold. They're buying euro against sterling, but it's under pressure and really a disappointing trade for the pound. And you can see a double top over here.
Hey Jay, while we're waiting on the euro, if you want to let me share my screen for one
Go ahead,
second.
Michael.
Okay, you have to permit me to share my screen.
Oh, let me do that.
Okay. You have to go to share screen, allow multiple participants. You can click on the share screen button, and then there's a little tab to the right, Jay, and it'll say allow multiple participants.
Just bear with me.
Okay.
Why should stop? Do I stop sharing?
Things happen. You first you have to allow multiple participants to share first,
Okay.
and
I'm
then
getting a
you
left.
have to stop and then you have to stop your sharing.
Okay, so where is the
I can't show
link?
you and you have a share. Do you see on the bottom where you have your share screen tab?
Yeah,
Right next to it, there should be a little arrow.
I got it.
Okay, and then allow. It should say allow multiple participants.
Okay, go ahead.
There you go. All right, let's try this again. Hold on a second. Let's see. There we go. Okay. Just give me a second while you're looking, while you're working here. Okay. So Jay, you should see my screen now, correct? Jay? Jay? Did I lose you totally? Jimmy, okay. All right, well, I'm going to share my screen and I'm going to start talking. Jay, I'm not sure what's going on. Aussie, New Zealand. Okay. I'm bringing this up because we discussed yesterday and we had a really interesting conversation. And so I want you guys to be able to see this. By the way, the trades of the day, the easiest trades of the day today and yesterday were long gold. And as you can see, I've had quite a good day. Just between yesterday and today, I'm up about 1% in my account. As you can see here, trading gold. I don't have a trade to show you yesterday, but it followed out our amazing trader principles. I was not here, obviously, on the call. I have the Aussie Kiwi up here, and I'm bringing it up because we had a great discussion yesterday, and we were looking at a 4-hour chart, okay? And we were talking about potentially running stops and what have you. And then I think the comment was, and I'm not looking to single out anybody, I just think that this is a really good trading lesson. So for the person who was discussing the Aussie Kiwi, hold on a second, let me just see for a second, got a question here. Good money was added, did last, good money was made, okay, and now I got it good. So you know what, that's great. Now I got a question for you. Thank you for responding. I'm glad you did well. If you could continue to communicate with me, I got a couple of questions for you because I'm interested. Good money was made. That's great. Okay. I want to be able to help you with our software, help you do what you do as well. So if you have certain strategies or certain things that you are looking for, that's great. But I'm going to have a couple of questions for you, if you don't mind. And this will be great. So number one, congratulations. I'm glad you made money. Okay. And if you did it based on the fact that you thought the 4 hour, even more important, let me make this bigger. Okay. Because let me tell you what I'm curious about. Okay. And you can, and this may be a good learning lesson for you. I'm glad money was made, and that's great. So, but I got a question for you because I've been carefully following this. So I'm going to go to, this was right here. Hang on a second. Okay, when we were talking yesterday, you can see my cursor. Okay, this is the candle that we were in at the time. Okay, right here. This was the candle. This is, if you look down, this was 9 o'clock until 1 o'clock yesterday. So this was squarely in the middle of, excuse me, I was here yesterday, I wasn't here Tuesday. Squarely in when we were talking. Okay, and yes, okay, we were here. So my question to you is that if you went long there, okay, anticipating this blue line being a stop run, okay, which is what we were talking about, all right, I got that, okay? So if you went long here, okay, my question to you is, what'd you do over here, okay? So if you went long in this candle, like we were talking, 1 4 hour bullish, and we were close to previous highs. Yeah, okay, I got, you know what I'm saying? I got that. Okay, that's good. Don't get me wrong. I'm not criticizing your trade, and thank you for and first of all, I'll never criticize any trade where you made money. Okay, that would be silly. Okay, and the 1 hour and the 4 hour were definitely very bullish, and when you get very, very good points. By the way, excellent points. And I see what you're doing. Okay. And so everything you're saying here is exactly correct. We were getting close to previous highs, and the market will typically run the highs to take the stops. Okay. I got that. And I agree with you on that. Great. But my question to you is that if you got in here, all right, before you did that stop run, all right, you had to go down here. Okay. So this went down to the low in this candle. So I don't know where you got it, where would have gotten it on this candle, but the low in this candle, okay, is 107.46 was the low in this candle. Okay, this line was at 107.79 that we had to take out. So my question to you is, what did you do when you dropped down here? Okay, how did you know it was going to stop? Number one, and number two, and by the way, I'm having this as a dialogue because I'm interested in hearing, and so this is not a criticism or a critique. I'm interested in hearing, okay, because of the way that we're trying to teach people to trade. So follow my logic here. We were talking about going long here for this stop hunt, okay. But before that even happened, all right, you see it came up here, didn't do the stop hunt, and then dropped. And it dropped from up here was 79 to 46. So my question to you is, did you hold it? You took the trade on a 15-minute chart, you use less risk, so you could move your stop to a forward chart confirm line. Okay, you took you 0.25. Okay, I like the way you're thinking. Okay, I really like the way you're thinking. Okay, you reduced the position size. Okay, I got that. And You wanted to be able to move your stop to a 4-hour chart on the confirm line. I got that. That held. That's good thinking. Okay, that's good thinking. And so my question, okay, that's good thinking. That's a good answer. If you move your stop, the only thing that you just said that concerns me, okay, and I'm not saying you do this regularly, okay, but you took the trade on a 15-minute chart, okay, but you took less, but you took less risk. I got that because you wanted to be able to, okay, and those were you prepared in advance to say, okay, I'm going to use a little less. I hope the 15-minute chart holds, but I'm prepared to go to the 4-hour chart. Okay, because what I wouldn't like to hear is that you had to stop on the 15-minute chart and you said, you know what, let me move that down. You know what, that's going to get hit. I don't want to get out of the trade. Let me move it down to below a 4-hour chart line, because that tells me if you would have gotten to the 4-hour chart line, I would hope that you wouldn't say, you know what, it's going to go back up there. Let's move it to the daily line. So if you're thinking beforehand, which is, I think, what I'm understanding from your writing. Okay, so if your thinking was beforehand, is that you took a smaller position, so anticipating that you may want to give yourself a little bit more room and use the 4-hour chart, then kudos to you. Smart thinking, good planning, great. Okay, excellent way to trade, and that's great. Okay, smart. You know what? So now, as far as you're concerned, okay, and I'm not saying you're not doing it, okay. Now you got to learn how, or really get comfortable using our lines, okay, the Amazing Trader lines, okay, to institute what you just did. Okay, that was good. Congratulations, number one, on a good trade. More importantly, congratulations on, I'm very happy to hear the thinking that you were using going into the trade, okay? Because that's where most people screw up, all right? So you reduced your risk originally, thinking you may want to move that stop loss, and therefore you can open up. So good, congratulations, all right? Good trade, and I'm glad we talked that through, okay? Because as you can see, all right, and you handled it correctly, and that's great. But this is a lesson for everybody else out there, okay? Because, all right, supposing, all right, not everybody out there, they liked your thought, okay? They liked the idea of getting in and going for the stop run at the 4-hour. Nice plan. However, they didn't think, okay, they didn't know where to properly put their stop loss, okay? So they may not have leveraged less than you did. And so that's a great lesson for this, okay? Because you may have people who said, like the theory, like the trade, okay? But they risked, let's just say, their maximum 0.25, at which point they probably would have gotten stopped out. Okay, because they would have gotten stopped out beforehand, and then you would have lost money. So this is a really, really important lesson for everybody out there to learn, okay, that you can be right, all right, and this is why trading is so difficult, and this is why many, many traders lose their money, okay, because you can be right in your thinking, which happens all the time, okay, but your timing may be a little off. Your leverage may be a little bit too much. Okay, so if you can't anticipate that, which you did great, all right, I guarantee you that there are people yesterday that had the same thoughts that you did, that were looking for stop hunts above the 4-hour, but unfortunately, or for them, all right, they got taken out on this move down because they were over leveraged. They either hit a stop loss, or they even got just scared, okay, because look what's going on. Look at this candle when it was down here. I mean, this was a pretty ugly candle. Now it closed back up here. There's a pretty ugly candle down here, all right? So I promise you that people with the right thought, bullish move, 4-hour line, 4-hour high, of the week to attack, go for stop losses, and finally did here, and then certainly over here, and now it's back down to here. Okay, but the point is that I guarantee you that people with the same thought that you had, all right, did not play it as smartly as you played it, and therefore got scared out of the trade over here in this move down. All right, they weren't comfortable where their stop was. They probably didn't have this 4-hour line, a 4-hour line. Who knows? This 4-hour line wasn't there, right? So all you had at the time, okay, this red line wasn't there. You had a really, really ugly candle right here. All right. And so if you don't have the right leverage on, if you didn't allow for that in your trade, you are now shaking. Okay. All right. And
Well-
now you're saying, oh man, look how far it could go. I mean, it could go, look at this candle. So good job. I hope everybody learned from that. Let's just take a look. Anything else? Current trade style, I don't think this stops me. Excellent. Okay. That's great. That's what I want to hear. Okay. So you have a current trading style and you're combining AT. All right. Perfect. Okay. All we want to do is be able to help people. Some people have no real trading plan, and they're looking to learn, and they're making mistakes everywhere. Okay. Other people have a good trading plan and sometimes have trouble executing it. The amazing trader can be used one of two ways. It could be used strictly on its own, the way we use our lines. Okay. I personally use it almost exclusively. The only other indicator I possibly put on here, I think I've mentioned, is from time to time, and I'll show you during class, how I use Fibonacci retracements occasionally. So we wait for retracements. And so when I see an open area and something's coming down and I'm looking for it to kind of stop, I may throw in a Fibonacci to get an idea. The 50 or the 61.8 retracement would be an area where I may look, potentially for an entry after a retracement. Okay, but that's something else. But so the amazing trader can be used as one tool in your toolbox, or it can be used as a standalone trading, whichever way makes sense for you. So if you're a competent trader and have some relative success, and now you're adding this as a tool to give you better entries, to be able to calculate your risk and manage your risk better, all the better. So that's good to hear. Thanks for that feedback. So thanks for that trade. Thanks for the trade idea. I hope that you continue, please, and and throw your trade ideas out there so we can talk about them. So again, great lesson. The lesson is that if you didn't know when you were here, if you didn't know, okay, that you can get a retracement down and you didn't leverage, deleverage or take a smaller position, you would have either gotten stopped out in this move, or very likely you would have panicked and just gotten out probably at the wrong time, because you had no idea whether this thing is going to keep going and going and going from here. This was a red candle. This was one ugly red candle at one point in time. Okay, so that makes sense. All right, thank you very much. I wanted to go over that because I listen to you guys out there as well. Nobody, please understand this. Nobody has a hold on the right things to do all the time. We have a style, but I'm all ears also. So for you guys that are out there that do have some trading experience, and you are looking at things, the great thing about this is that bring them up. And please, everybody else, we have one person who's been fabulous by communicating his ideas and giving us content to help create, some lessons for you guys, because it's that's a great thing to do. But guys, throw us ideas if you can. If you see a trade, if you're thinking of a trade, during this period that we're doing, throw it out there and we'll analyze it together. So this is great. Congratulations once again. I don't want to keep harping on it, but you played that beautifully, and good job. Question is, what happens now? Okay, what happens now? Where are you going to be? Well, here's the 4-hour chart. Okay, you had your 3 weeks ago, so I guess that's, almost a month. You did, look at that, here's your stop run, right above, not only last week's highs, okay, you even did a little run above last month's high, the month's highs, right over here. So that was good. And we had these ladders pointing all the way up to it, Question is, what do we do here? Okay, here's the question. Big move down. I mean, but then we had a final breakdown. Okay, and now we're heading back up. So we got a little battle going on here. We have these red lines building. Okay, we took out the high here. I'm almost, to me, okay, Aussie Kiwi, to me looks like if I had to make a guess, I would be playing. I'm not making a guess. Again, I'm not trading a 4-hour chart, especially on a Thursday. Okay. However, a long position, if this was like a Monday, by the way, if this was a Monday or even a Tuesday, I would maybe consider actually going long, stop below this line over here. All right, right here, and hope to get my take profit right up in this area. Aussie Kiwi looks, looks strong. Big move down, consolidation. What I like is it's almost, can you talk about a run, stop run? It's almost got big move down, wipe out people, okay, and then maybe start its new move up. So you're certainly not going short right now. You look at this chart, right? Very simple. You're certainly not going short here. Your opportunity to go short, if at all, would have been here to get out over here somewhere. But you're not going short here up against the line. We're building lines. If anything, we'd be going long on a 4-hour chart. If this were a 15-minute chart, just like this, I would be going long right now. I hope that makes sense. Okay. See if there's anything else here. Hang on. Hey, and yeah, thanks for being honest about it. You closed it a little early. You didn't get your full profit. Okay. So not a great trade. Well, a couple of comments. Number one, any trade you make money on is a great trade. I'm sorry. Okay. I'm a win or a lose guy. All right. If you make money, great trade. All right. If you lose money, not a great trade. I'm real cut and dried. Okay. Trying to maximize a trade, okay, is the hardest thing to do, because your psychology works against you. And so just think about this a little bit. If a trade is going, I think I might have mentioned this on one of the previous calls, but it's really important. Okay, managing your trade. One of the reasons why we like the Amazing Trader so much is because we can set it up so that you don't have to, you say you closed it a little early. Yeah, people close, people trade and close things early because they're scared of it. I think I mentioned this a couple of days ago, so I'll do it again. Okay. If you're in a losing position, psychologically, you don't want to close a trade, because until you close a trade, you didn't really lose, you're just losing. Okay, and there's a difference psychologically. You can still come back, and you're hesitant to close a trade. So what happens is that you almost always, if you set a stop loss, okay, and if you adhere to at least your stop losses, you very, very rarely will get out of a trade at a loss unless it comes down and hits your stop loss. You'll just let it go. You're going to let it go to your stop loss. All right. Now, in the other direction, when you're in a profit, the same thing is working in your head. Okay. Well, you're up money, but you didn't really make it yet because you didn't close the position and kind of bank the profit. So your psychological tendency is always when you're long and when you're profitable, whether it's long or short, is to close your trade a little early, because remember, everything will retrace. A 15-minute, 5-minute charts retrace, 15-minute charts retrace, and now every trade will retrace. So, if you have a stop loss, a take profit of 20 pips, and you get up to 12 or 13, all right, and then all of a sudden now it starts coming back down, all right, to 10, to 8, to 5. Happens all the time. All right. Your body is anxious, your mind is anxious. You had a profit, you don't want to give it back. You don't want to turn a winner into a loser. You want to book something and then move on, and you'll close the trade only for the trade to, okay, consolidate, maybe continue to go a little bit against you, but only for eventually, not eventually, but reasonably to stop and then reverse again and continue in the direction that you wanted it to go in. Okay, it happens all the time. That's what the difficulty is in trading. All right, managing a position in trading is extremely stressful and extremely difficult, in my opinion, because your psychology is working against you, and emotions and human emotions. And so, a losing trade, you don't want to give in, you don't want to recognize that loss. And that's what forces people to change their stop losses also, by the way, which is number one sin in trading. You don't do that. But at least more often than not, your losing trades will hit your stop loss. All right. Rarely will you get out of a losing trade. If your stop loss is 20 pips, you rarely will you close a trade down 13. You're gonna, what the heck? I'll let it go to 20 or down 12, rarely, or 15. Okay. So your stop losses ending up, your losing trades generally hit your stop losses. Okay. But your winning trades, all right, if you don't have that take profit set and you're not operating like that, then you're like, oh, it's up, it's down, it's up, it's down. Chances are you're going to make a poor decision and get out at the wrong time. Okay. So anyway, that's my lecture or lesson on that is concerned. Here's Aussie Kiwi. So just taking a look at it. I'm looking at a 4-hour chart. We're still building. I mean, yeah, we're building up to here. Here's the high, came back up here again. Now we're building again. So where's the pressure? Pressure is building. All right. Look at these ladders building. Okay. You want to be long Aussie Kiwi. Okay. But on a 4-hour chart, not right this second. Now let's just, take a look at the 1 hour. See where we got. Came down to, look at this. Look how it came down to the red line. 1, 2, 3. Stop right here. Okay. Don't tell me the amazing trader lines aren't amazing. Okay. When you have this move up and you have a big move down and it stops literally, boom, right here with this red line, which formed here, which again was attacked right to it and then held here, attacked and held here. All right. You want to be going long Aussie Kiwi. Okay. Now what time? It's Thursday. It's 11:05. That's your 1-hour chart. Hang on a second. So the 15-minute for a second before we do anything. 15-minute chart bouncing off the lows of the days. What I would wait for on the 15-minute chart right now is to get into this trade. I would wait, hopefully get a second red line somewhere, even if it moves up a little bit and then comes right back down. I would like to see another red line right here, confirm the low of the day is in. Okay, hit it here, moved up higher, big move down. I'd like to see this confirmed. I think this is moving up. You can almost go long here with the stop below here, but I'm going to wait. For more comfort, but I'd like to see a second red line be put in over here. But I think the next move is up. Here was your move down. Okay, at the very least, you should make an attempt to get back up to this area. Okay, so and this is where people, you got to have, I don't want to say faith, but okay, if you're going to be going long, all right, you want to be going long in this area. All right. You don't want to be waiting until you have some moves up here, and then all of a sudden go long up here. Okay. So if you're thinking long, you're thinking down here, but we want a little more confirmation. That's all. And it's 5 after 11. So I don't know, we'll see. I'm going to watch it for a little while, but I think the low of the day is in. I think you can put the stop below here, take profit up here. Where would that be? Hold on a second. I had a good day. Hang on. Low of the day, huh? you know what? I'm actually going to go long. All right, hang on. Let's see. I just screwed up yesterday and did it. Okay, I went long. Yeah, all right. I went long. And that's I'm closing for the day. And we'll see how that trade works out. I would have preferred to no, I like it here. We'll see.
Okay, Michael, as we close out, just to let you know, I scratched that trade exactly break even.
Break even. Okay.
Yeah, I
All right.
mean, it wasn't doing it. I waited long enough. At that point, we're closing up.
Yeah.
It's exactly break even. Okay.
Let me see where it is. Yeah, the thing hasn't moved. Hasn't really moved much.
Well, that line
Jimmy,
held, by the way,
Yeah. Oh no, I got you.
and that would have
Okay,
been a
well, you know
better.
what? I still, by the way, I still, you know what? I still like that trade. I still think the euro's going up.
Yeah,
Okay.
me too. But
I was listening, by the way. I actually just, between me and you, I was following and I did like that trade. For me, I like, me and you, okay. I'm more comfortable trading a 15-minute chart than the 5-minute chart.
Well, the 15-minute
So,
chart
as a
had
matter
the
of fact, I
same
don't look if you can see here. Take a look. You can see I actually have it set up. as a
same
buy.
line, by the way. Yeah.
Okay, yeah, okay. I actually have it set up as a buy. As a matter of fact, you know what? Jeez.
We came right down to that line. That shows you the preceding lines are so important.
I know. 43, 52. You know what? No, I kind of missed it because I was doing my whole spiel on there. I kind of missed it. Quick move. I still like this trade, Jay.
Yeah.
Actually.
But at a lower level, you had
Yeah.
at a lower level, you had a great risk reward. That's all.
All right.
But
well,
the
I'm gonna run.
Okay, let me just.
Sorry.
I'll turn the recording off.
Yeah, no. All right, yeah, you could do it. Okay, when you close it, Jay, what you gotta do is close the meeting. Okay, and that is stop share. Yeah, hold on. I could do this now. Hold on. Stop share, which I just did. Okay. Then if you go to leave, I can leave the webinar. If you go to end the meeting, Jay, and then end the meeting for everybody, the recording will automatically record. Okay.
Gotcha, Michael. Okay.
Okay. All right. So that's it for today, guys. Thank you very much. Thank